Welcome to Podcastify, your personal generative AI podcast. Today, we're diving deep into the swirling waters of market-moving news, from trade wars to tech tremors and everything in between. So buckle up.
Sounds like a wild ride. Where do we even begin with all this?
Well, the biggest splash, no doubt, is this tariff announcement. Trump slapping a 25% tariff on all imports from Japan and South Korea? That's monumental. Effective August 1st, 2025. The market's already reacting. S&P down almost a full percentage point, Dow taking a dive.
Ouch. Yeah, a 25% blanket tariff? That's going to send ripples through a lot of sectors. Think automotive, electronics, semiconductors, anything heavily reliant on those Asian supply chains.
Exactly. Companies are going to be scrambling to adjust. Increased costs, disrupted logistics, it's a mess. Definitely a macro risk to keep a close eye on.
Absolutely. Now, shifting gears a bit, what about this Fluence Energy contract? A massive 600 megawatt-hour battery storage project in Australia. Seems like a big win for them.
Huge win. Massive. Not just the size, 600 megawatt hours is substantial, but also the 20-year service agreement and the software suite. This really solidifies their position in the utility-scale energy storage market.
Good news for renewable energy infrastructure investors, then?
Definitely. This kind of long-term contract provides stability and predictable revenue streams, a good sign for Fluence's growth trajectory.
Okay, on to some less positive news. Centene Corporation, Hims & Hers Health, Sarepta Therapeutics, PetMed Express, and even Apple, all facing legal trouble. Investigations, lawsuits, what's the common thread here?
Seems like a lot of alleged securities violations, misleading disclosures, undisclosed risks, that sort of thing. These kinds of legal battles can be a real drag on stock performance, even if the companies aren't ultimately found guilty. The legal fees, the reputational damage, it all adds up.
Right? And then there's the added uncertainty. Investors hate uncertainty. It's like a dark cloud hanging over the stock, making it difficult to assess the true value.
Precisely. Speaking of uncertainty, let's talk crypto. This Trump meme coin launching on the Tron blockchain, it's a curious development.
Curious is one word for it. Justin's son and his hype machine, I've seen this movie before. Lots of short-term volatility, a potential pump and dump scenario. High risk, high reward, I guess.
High risk, definitely. And then there's the Clarity Act. 65 crypto firms lobbying for CFTC oversight instead of the SEC. That could be a game changer for the industry if it passes. It could be. The CFTC is generally seen as more lenient towards crypto than the SEC. So yeah, this could be a real tailwind for crypto equities like Coinbase and Marathon Digital. But it's still early days.
Agreed. Lots to unpack here. And finally, a bit of good news from India. Double-digit earnings growth projected for fiscal year 2026. Sounds promising.
Very promising. A potential boost for India-focused ETFs and multinationals with exposure to the Indian market. Definitely something to watch.
Lots of moving pieces in the market right now. Thanks for breaking it down. Until next time on Podcastify.
So this Fluence Energy deal, impressive, right? A 600 megawatt hour battery project. That's not small potatoes.
No, not at all. And in Australia, no less. That market is really embracing renewable energy solutions.
It is. And this isn't just about the size of the project, though that's certainly significant. It's the whole package. The 20-year service agreement, the inclusion of their grid stack technology. It really cements Fluence's position as a major player in this space.
Yeah, that long-term contract is key. Provides predictable revenue streams, which investors love. Makes it easier to forecast growth, reduces risk.
Exactly. It's a sign of confidence in Fluence's technology and their ability to deliver. And it's a win for renewable energy infrastructure investors in general. This kind of large-scale energy storage is crucial for grid stability as we transition to more intermittent renewable sources like solar and wind.
Absolutely. It helps smooth out the peaks and troughs of renewable energy generation, making it more reliable and dispatchable. It basically allows you to store sunshine and wind for later use, which is pretty cool when you think about it.
It is. It's like a giant battery backup for the power grid. And speaking of batteries, 600 megawatt hours, that's enough to power a significant number of homes for an extended period. Do you have any idea how many? I haven't crunched the numbers, but
I haven't either, off the top of my head. but it's definitely a substantial amount of energy storage. And the fact that they're using their grid stack technology is also noteworthy. It's a modular, scalable system, which makes it easier to deploy and adapt to different project needs.
Good point. That modularity is a big advantage. It offers flexibility and reduces complexity, which can translate into cost savings and faster deployment times. So overall, a very positive development for Fluence and for the broader energy storage market. It signals continued growth and innovation in the sector.
Agreed. It's a step in the right direction towards a more sustainable energy future. And for investors, it's a reminder that there are significant opportunities in the renewable energy space. Companies like Fluence are leading the charge, so to speak.
So we were talking about Fluence Energy and their big win in Australia. 600 megawatt hours, that's a lot of juice. But shifting gears a bit, Centene Corporation, not such good news there.
Yeah, not good at all. Under federal investigation for potential securities violations. Misleading disclosures, apparently. That never ends well.
It rarely does, especially for healthcare companies. Public trust is everything in that sector, and once that's damaged, it can be incredibly difficult to recover.
Absolutely. And these investigations, even if they don't lead to actual charges, can be a real drag on stock performance. The legal fees alone can be substantial. Not to mention the reputational damage, like you said.
Exactly. Investors get spooked. Uncertainty creates volatility. And with Centene, this isn't the first time they've faced scrutiny, is it?
No, it's not. I think they've had some issues in the past with their Medicaid and Medicare operations. So this latest investigation just adds another layer of concern for investors.
It does. And the key point here is misleading disclosures. That suggests a potential breach of trust with investors. If a company isn't being completely transparent about its business practices, its risks, its financial health, that's a big red flag.
Huge red flag. And it can lead to some serious consequences. Fines, penalties, lawsuits. It can get messy quickly.
It can. And for a company like Centene, which operates in a highly regulated industry, this kind of legal trouble can be particularly damaging. They're dealing with sensitive patient data, government contracts. There's a lot at stake.
Yeah, a lot at stake. So investors definitely need to pay close attention to this developing situation. It's not something to take lightly. This could have a significant impact on the company's future.
So we were discussing Centene, and, well, this whole misleading disclosures thing seems to be a recurring theme. Apple's facing a class action lawsuit, too. Same issue, apparently.
Oh, really? Apple? That's surprising. They're usually so buttoned up. What's the class period?
June 10th, 2024 to June 9th, 2025. Lead plaintiff deadline is August 19th, 2025. So relatively recent.
And what kind of disclosures are we talking about? Anything specific?
Not in the information I have here, but these kinds of lawsuits usually follow earnings misses or some kind of lapse in disclosure, something that could be construed as misleading investors.
Right. So the usual. Painting a rosier picture than reality warrants. And I mean, for Apple, a company of that size, even a small lapse can have huge repercussions.
Absolutely. It's not just about the potential financial penalties, though those can be substantial, obviously. It's the hit to their reputation. Apple's built on trust, on this image of innovation and transparency. This kind of lawsuit, it chips away at that, even if they're ultimately exonerated.
Yeah, the legal overhang itself can be a drag on stock performance. Investors hate uncertainty, and this creates a lot of it.
Exactly. And we've seen this play out before with other companies. The legal fees, the management distraction, it all adds up. And well, it'll be interesting to see how this unfolds.
It will. Speaking of legal hot water, PetMed Express, they're being investigated for potential securities fraud too. Again, misleading business disclosures seem to be at the heart of it.
PetMed Express? Oh, I hadn't heard about that one. That's interesting. What kind of disclosures are we talking about here? Anything specific?
Not in the information I have here. It just says misleading business disclosures to investors. So pretty vague at this point. Still early days, I guess.
I see. So another case of potential embellishment, overstating performance, downplaying risks, that sort of thing. It's becoming a trend, isn't it?
It does seem that way. A lot of companies playing fast and loose with the truth, it appears. and investors are getting wise to it. They're not just going to sit back and take it anymore.
They're not going to take it anymore, which, good for them. But this whole trend of less than transparent disclosures, it's troubling.
It is. It erodes trust in the market, makes investors wary, and it can have real consequences for these companies. Look at PetMed Express. Potential securities fraud investigation, that's serious.
It is. And again, misleading disclosures seem to be the crux of the issue. It makes you wonder, how widespread is this practice? Are other companies doing the same thing, just haven't been caught yet?
It's a valid question, and it's one that investors need to be asking themselves. Do your due diligence. Don't just take a company's word for it. Look at their financials, their track record, their legal history.
Precisely. And if something seems off, if the numbers don't add up, if the story doesn't quite make sense, trust your gut. Do some digging, because these kinds of lapses in transparency, they can cost investors a lot of money.
They can, and they can damage the integrity of the market as a whole. So yeah, it's definitely something to keep a close eye on. Now, shifting gears completely, let's talk crypto. This Trump meme coin launching on the Tron blockchain. What do you make of that?
Oh, the Trump meme coin. Well, that's something. Justin Sun and his penchant for generating hype. It's a familiar pattern.
It is. Lots of short-term volatility, a potential pump and dump scenario. High risk, high reward, I guess.
High risk, definitely. And then there's the whole meme coin phenomenon itself. It's a speculative bubble, isn't it? Driven by social media trends and memes. It's not exactly based on sound fundamentals.
No, not at all. It's pure speculation. Greater fool theory in action. Buy low, hoping someone even more foolish will buy it from you at a higher price.
Exactly. And with Justin Sun involved, well, let's just say he has a reputation for promoting his projects aggressively. Shall we say?
Yeah, let's just say that. So investors should proceed with extreme caution, I think. This could be a wild ride. Lots of potential for short-term gains, but also a very real risk of losing your shirt.
So we touched on this earlier, but this Clarity Act, it could really shake things up in the crypto world, couldn't it? 65 firms lobbying for CFTC oversight, that's a pretty big deal.
It is. A Coinbase-led coalition, too. That adds some serious weight. They're not, small players.
No, not at all. And the key here is the shift from SEC oversight to the CFTC. The CFTC is generally seen as more lenient, shall we say, towards crypto, less stringent regulations.
Yeah, less stringent, which could be a real boon for crypto equities. Coinbase, obviously, Mara, Marathon Digital, those kinds of companies.
Exactly. If this bill passes, it could be a significant tailwind for them. Remove some of the regulatory uncertainty that's been hanging over the sector.
Right. Uncertainty is kryptonite for investors. So yeah, this could be big, but it's still early days, right? No guarantee this thing will actually, make it through.
No guarantee at all. Lots of hurdles to clear, but it's definitely something to watch. A potential game changer, I think. Now, Sarepta Therapeutics, not such good news there.
Oh, what's happening with Sarepta?
Class action lawsuit. Shareholders alleging undisclosed risks. Likely tied to drug approvals, it seems.
Drug approvals? That's tricky territory, especially for biotech companies. Those approvals are everything.
They are. And if there are undisclosed risks, well, that could be a problem. A big problem.
Yeah, investors need to know what they're getting into. All the potential upsides and downsides. And if a company isn't being completely transparent about the risks, well, that's a breach of trust.
It is a serious one. And these kinds of lawsuits, they can be a real drag. Even if the company is ultimately exonerated, the legal fees, the reputational damage, it all adds up.
It does. So yeah, another one to keep an eye on. Sarepta Therapeutics, undisclosed risks, never a good sign.
So we were talking about Sarepta and undisclosed risks, lawsuits. It's a minefield out there. But shifting gears a bit, India. Some good news coming out of there, actually. Double-digit earnings growth projected for fiscal year 2026.
Oh, double-digit growth? That's impressive, especially in this current economic climate. What's driving that, I wonder?
Well, the first quarter of FY26 is being called the crossover quarter, the point where profit growth shifts from single digits to double digits. Sounds promising.
Crossover quarter, I like that. Kind of catchy. But what sectors are we talking about here? Anything specific?
Yeah, likely industrials, financials, and consumer staples. Those seem to be the key drivers.
Industrials, financials, consumer staples. Makes sense. Solid, established sectors. Less susceptible to market fluctuations, I guess. More resilient.
Resilient, exactly. And this is good news for, well, anyone invested in India-focused ETFs, INDA, for example, or multinationals with significant exposure to the Indian market.
Right. Yeah, that's the iShares MSCI India ETF, isn't it? Yeah, this could be a real boost for them and for the Indian economy as a whole, I imagine.
It could be a sign of continued growth and instability in a region that's becoming increasingly important on the global stage.
Absolutely. India is a major player, and this kind of positive economic news, well, it just reinforces that. So yeah, definitely something to keep an eye on. India, double-digit growth, sounds promising, very promising.
So, Hims and Hers Health, hit with a class action lawsuit. Never good news.
No, not good at all, especially for a company like Hims and Hers. They're still relatively young, right, in the telehealth space.
They are. And this kind of legal trouble, it can be a real setback, especially for a growth stock. You know, investors get skittish.
They do. Uncertainty breeds fear, and fear leads to selling. Simple as that.
It is. And with Hims and Hers, well, the allegations are unspecified, at least in the information we have here.
Unspecified. That's interesting, but likely tied to growth metrics or disclosures, it seems.
Growth metrics or disclosures. Yeah, so the usual suspects, painting a rosier picture than reality warrants, overstating performance perhaps, downplaying risks, that sort of thing.
Yeah, the classic embellishment. And for a company like Hims and Hers, a company that's so reliant on growth, well, this kind of lawsuit, it could really dampen momentum.
Dampen momentum. Exactly. And it makes you wonder what are they not telling us? If they're being investigated for potential misleading disclosures, it makes you question the validity of their previous statements.
It does. It erodes trust, and trust is everything in this business, especially in the healthcare sector. People need to feel confident that the companies they're dealing with are being honest and transparent.
Honest and transparent. Precisely. And if there are undisclosed risks, well, that's a big red flag for investors. It suggests that there may be underlying issues that the company is trying to hide.
Right. And the market doesn't like secrets. Secrets are bad for business. They create uncertainty. And uncertainty, well, we've talked about that. It's toxic.
Toxic. Exactly. So investors need to pay close attention to this developing situation. Do their due diligence. Don't just take the company's word for it. Look at the financials, the track record, the legal history, because this kind of legal trouble, it can have serious consequences.
Serious consequences. Absolutely. It can impact the stock price. It can damage the company's reputation. It can even, in some cases, lead to financial restatements. So yeah, Hims and Hers Health, a company to watch carefully, very carefully. Thanks for tuning into Podcastify, everyone. Until next time, take care and stay informed.